If you take a glance at the US markets today, one word defines the landscape: turbulence. We've seen a whipsaw session plunging, rallying, and then pulling back again, all within a single day. Behind this roller coaster ride lies a mix of anxiety and the rumor mill. On one side, there's jitteriness about the Bank of Japan potentially hiking rates in December, which threatens to turn off the tap of cheap global liquidity. On the other, social media went into overdrive with a viral rumor that Fed Chair Jerome Powell was resigning, a claim that has been debunked as completely baseless. Add in the speculation swirling around the incoming administration's cabinet picks in Washington, and it's clear fear and sentiment are in the driver's seat today. However, if we take a step back and cut through this short-term fog, we'll see a far more significant anniversary taking place. This is the force that has truly defined the U.S. equity market for the past 3 years and will likely define the next decade. I'm talking about the 3-year anniversary of the launch of ChatGPT. 3 years ago, when OpenAI quietly released ChatGPT, you realized we were standing on the precipice of a paradigm shift. Back then, it was viewed as a quirky chatbot. But today, we have to call it what it is: the lifeline of the American stock market and its new engine of growth. Let's look at the facts. In late 2022, Wall Street was mired in a painful bear market, with tech stocks facing a brutal sell-off. Then came the explosion of generative AI, and everything changed. Tech titans led by Nvidia and Microsoft rode this wave to push the S&P 500 to record highs. The data is undeniable. Nearly all the major gains in the US market over the last couple of years have been driven by a handful of companies deeply tethered to the AI revolution. This isn't just about stock prices, it's about a total reinvention of business models. Just look at Google's reaction. Before ChatGPT, Google was comfortable, complacent, even dominating the AI space. ChatGPT shattered that calm and forced the company into a wartime footing. From launching the Gemini model to fully integrating AI into search, this fierce competition caused some volatility in Google's market cap, but it ultimately forced these giants to evolve and become stronger. The market logic is now crystal clear. If you don't have an AI strategy, you don't have a future. And that is why I argue that compared to today's fake rumors about Jerome Powell or speculation about the Bank of Japan, the trajectory of AI is the true signal amidst the noise. Of course, the market faces new challenges. Investors are getting picky. They don't just want to hear a good story anymore. They demand to see the bottom line, actual profits generated by AI. Any news suggesting that AI development is lagging expectations can trigger a sell-off. This tells us the market is shifting from blind euphoria back to rational calculation. To sum up, today's volatility serves as a reminder to be wary of social media noise and emotional trading. But taking the long view, the history of the past 3 years proves one thing: the AI revolution is not a passing trend, it is the new reality. No matter how short-term interest rate policies shift or who sits in the Fed chair's seat, the US stock market will rely on the productivity revolution driven by AI for a long time to come. For the smart investor, rather than losing sleep over daily rumors, it pays to focus on the core data driving technological change, because once the noise fades, only real growth remains.